I woke up yesterday morning with this theme, thinking at some point these inflation fears are going to cause some rotation out of growth stocks, which are longer duration plays, and earnings, tech stocks, and more into value stocks. And sure enough, by the afternoon, that started to happen. So I think we could certainly see a lot more of that as we see inflation fears continue to rise.
How much of this, if at all, Dory, do you think is related to capital gains potential increases? Now, we're not going to blame it all on taxes, but we talked about it yesterday, because if you are sitting on years of winning stocks and you're thinking about selling for whatever reason, you know you're going to get hit with capital gains. But you're looking at rates now versus potentially higher rates later. So I've got to imagine, and this was actually from a tax expert we had on yesterday, and Robert Frank talked about it, which is that you're going to sell the big winners now so you can buy other things because you simply don't want to get whacked in capital gains down the road? Or is that kind of a red herring and just an easy tax target, if you will, Dory?
Well, it certainly plays into your thinking, or maybe confirms on a thought or position that you already have. So if you're thinking maybe I need to sell, and then boom, the tax aspect is added onto it. But I don't think this is a tax-driven type sell-off.
All right, so let's say we know there is some selling, whatever the cause. Apple, Amazon, Tesla being sold, money is being raised. You think some of that money should or could go into smaller community banks. Why?
Well, we've already seen banks drive up off the lows after they've proven the street wrong on all the fears that they had last year. The banks are strong with PPP, loaded with liquidity, plenty of record high levels of capital. But the rotation in the banks starts at the large money center banks and has moved down. And it hasn't moved down to all the community banks or regional banks yet. So stocks like Comerica, which do really well in rising rates, are still trading at a discount to other banks. The banks as a sector are trading at maybe 65% of the S&P PE ratio. Banner is a good community bank, a larger regional bank. North Rim up in Alaska, all of those trade at discounts to other banks and pop in just around a 3% average yield on all of them. So it's a nice place to hang out in the banking sector.
Shepard Smith here. Thanks for watching CNBC on YouTube.